Welcome guys to this weekly analysis. I'm not going to take much of your time. This session was supposed to be for one of my students. It was supposed to be a one-on-one, but he couldn't make it, so I decided to make it general. So we're going to analyze our previous trades, what we saw last week, and also try to analyze what is on for us next week. Now we start from the daily time frame. We can all see that there is a solid downtrend, guys. It's still a downtrend until we see price breaking this trend line, and there is this resistance. Sometimes price can fake you out till this resistance and then go back in, but if we see a break of this trend line and this resistance and a retest, we may say the trend has changed till we reach this resistance too. Let me not go too far, so let's analyze the trades we had last week, guys. Let's go to the 15-minute. So on the 4-hour, now we have a strategy which I want to unveil because this video is supposed to be for one person or for only my students in mentorship, but I think we're going to post it on YouTube too. Now we drew this trend line from the 4-hour. Of course, our week began from around this level, this area. Yeah, so these are the trades we took during the week, this whole part. Let me try to just put a separation from this area to around, of course, today is Sunday. The market opens in 59 minutes, so to around this area. So it was a solid uptrend the whole of last week, but we had some sells in it, and we made some. Most trades were profits, guys. Most trades were profit, though we had some losses. Yeah, we shall be seeing why in just a few. So what made us take our first trade of the week? Let me drop to the 15-minute and see these candles properly. So let's see. First trade of the week. There you are. So the reason why we took this first trade of the week, guys, is because in our strategy, this was an M. There was a trend line running from the upper side, and it was giving us another touch. I won't go back and draw the trend line, but there's something like this. There's something like this, guys. I'm so sorry I removed the trend line, but there's something like this, taking in those two parts. So remember, it was a Sunday, so we entered this trade late. We actually began analyzing from here. So we're like, if price comes back to this level, sorry about those dogs, guys. If price comes back to this level, we would be short in this pair. Our initial point was to short from this upper zone, but when it reached the trend line and we saw this, we actually entered from this area here. That's where we sold from. So we made close to, let me see how many pips those were. I don't remember those trades too good. So made close to 70 pips because we jumped out from around here, guys. We jumped out from around here, and this resistance is not supposed to be here, but it's here because we analyzed this up to here. So the reason why we got out of this trade was when we saw this reverse back, and our anticipation of that week was a bullish week. So this was a very fast sell, guys. It was very fast. So when we took this trade, we went on to the next trade. Now this was the trade which guys were like, why? Because at first our analysis was a sell. You see this sell? We expected it to push further and maybe reach this point and maybe come to this point. Guys, that was it. But because there's a fib level around there. Now if you go back and watch our previous video, we analyzed that this market would give us a pullback. If you go back and watch the video, I think on TradingView, we anticipated that this market would pull back to this area. This was a 61 point area, 8 area and give us a buy. I'm so sorry about the dogs, guys. So our analysis changed when we saw this. We saw this M pattern, but we weren't sure that the trend had changed. So what we decided to do, we drew this trend line. This was the second touch of a trend line, but we weren't sure if we would take this buy. So we waited for price to come back to break this resistance. This was our first resistance. It was too tiny. So when price broke it and gave us a retest, now there's something called psychological levels. This line you see, that was the second confluence. Then the third touch of a trend line, that was the fourth. That was the third, guys, right? That was the third. Then we remember this W, and we remember this was the 61.8. We entered this for a buy. Now our target was initially here, because I remember on the left there's a resistance. This was a resistance. This line you see, this was a solid resistance, guys. Let's see it on the left. This level, that was the resistance, and that's where our first TP was. But price continued to push further. Guys, and came to this zone. So that was in the evening. I'm sorry I can't bring out the screenshots of this trade, but they're really there, and I would love to show you guys. I'm using a different computer. So when price reached here, it was in the evening, and we saw momentum had already given us a lot. So we decided to sell this trade overnight. Now our target was back to this level. This was our target initially. But what we learn in the course is that, guys, we study candlesticks, guys. Once you see these 2-week rejections, start thinking twice about that trade. And the market was giving us small candles, guys, small candles. So I remember we got out from around this level, this psychological level, since we use psychological levels as support and resistance. So we drew a trend line. There's a trend line here. I don't know why I removed this trend line so often. I think so. There's a trend line around this level. And even take it. I remember deleting most trend lines, guys, because we overdo analysis. So we bought this pair. What was the confluence, guys? What was the confluence? You see this W pattern. Of course, we'll be analyzing the market. You see this W pattern. First leg, second leg, then we have an engulfing. I'm talking so slow, I don't want to unveil some things. We have an engulfing on a psychological level, which we call support, and we have a trend line there. Took the trade. This was our level, because this was our target, because we expected price to do something like this. Since this resistance was broken, we expected a pullback back to this trend line and a push, but that didn't happen. So when we reached here, we kind of locked profits. We locked profits, and price just came and did this. Now this was during the night, guys. You remember this trade. Now let's see this. Look at this. This trend line is from the 4-hour time frame, guys. No, it's from the daily. It's from the daily, guys. From the daily. Look at this, guys. This trend line, the reason why it starts from here is because this is where the major slope comes from. This is the first touch, second touch, giving us an M. I want to unveil some stuff. So there's the third touch there, which we're looking at right now. So brings us back here. When we reached here, this was our target. We waited for the trade. Of course, here we weren't trading. We were waiting for this, the break of this trend line, guys, which I've told you about. Immediately price broke this trend line, gave us a retrace. We don't enter from there. Nowadays we study GU. GU normally comes back to the previous high it created to form that M. So we sold GU with a confluence of psychological level, trend line, M pattern. Those are 3, break and retest. So we sold and we made over close to 90 pips. These were close to 92 pips, I remember. So Why did we get out? Look at this support. Solid support, guys. Solid support. So that same evening, this was during the day in Ugandan time. This was during the day in Ugandan time, and this was the London session. And it New York entered, started from around there, I think, I remember. So we got out from here. Our TP was hit. But guys, let me delete this. Look at what happened. Remember this trend line? This one which gave us 1-2 trades. Which gave us one trade. It was here, it was back here. Now some people would be like, guys, I'm waiting. Since price came here. Now since I'm waiting for a pullback here, then a shoot. But since we had been following GU, we're like, some people have sold, we have sold from here, right? Some people are waiting for this retest on maybe another time frame to buy. So let's take another buy in the same day, second setup of the day. Look at this confluence, guys. It came, we got out, gave us the first leg, gave us the second leg. Let me try to remove this a bit. GU came like this. This was the first leg. Initially, some students of mine entered from here on saying the small leg. You get? That was the first, but I wouldn't advise to do that next time because there's no solid touch of the trend line. It's there, but it's not yet in the zone, guys. They say don't wait for the trade to be too perfect, but look at this. It came, gave us this, gave us a second leg and short. Guys, we're in this trade back to the top, back to this trend line. Since that was our resistance, and we're looking at that major trend line from the 4-hour time frame. Now the reason why we took this buy is there's a solid support down there. There's a psychological level which is here. Those are 2. That's the trend line 3 and a W pattern. 4 confluences, guys. So we bought, guys. This trade was too fast. It was too fast, guys. I think on the 5-minute there were only bullish candles, because I remember sharing it, the screenshot, and there were only bullish candles. So we got out from around here. Actually, I almost messed up. The mistake I did was I got too busy. I thought by the time I came back, price had already started reversing. So I closed my trades from here. That was a mistake, guys. I remember my phone was off. No, I had a meeting, so price engulfed this. I jumped out from here and I knew I was caught in. So let's move on to the next. This trend line was broken at night. Price came back and started doing this. So what happened the next day, guys? What happened the next day? Friday. We drew this trend line on Friday, and this was the second touch of the trend line, but we saw an M there. Sometimes I'm spilling, but sometimes when you see an M, it means price is going to drop. So this was the first touch, then a second touch around there. So what we did, I called out this signal when it was around here, because we saw this M, then a retest of the neckline, but I jumped in from here because I was late for the trade, guys. I did analysis when the trade was here. Some of my students got this trade from the top here, but me, I waited for the break of this level. Then I saw this solid rejection. Let me try to remove this. I saw this solid rejection. Oh shit, let me remove this too. Are you guys seeing this solid rejection? This, which shows that price had broken our resistance and pulled back in, but it showed that bears are in control. So we made some money, but if I share the chart, this was supposed to be our take profit, and it was, though we locked in profits when the trade was around here because we expected a pullback. Now this is what happened on Friday, guys. We expected a pullback to this broken area. So This was also the 61.8. This area was the 61.8 from here till here. That was the 61.8, this area. So what happened? We waited for price. We got out and we're like, let's wait. Our initial trade was supposed to be here. Now I have a student, the person I'm supposed to be having this live session with jumped in from around here. And I remember I sent him screenshots. I was like, price can be pushed. There's something called the trap. I'll share something small. You'll be waiting for an M pattern, and this happens. Price is pumped. This is the reason why. Now let me give you a logic behind it. Remember when they say, let me say it's a W, you're waiting for the confirmation of a W and this happens, but goes to this direction. W's are never perfect. Double tops to double bottoms are hard to spot and they're too perfect. Reason being, let me give you an example. An investor will call a major bank and be like, I want to buy 2 million. I want to buy 2 million points in GBP USD. So what these banks will be, the person will be like, I want to buy it at 1.14580. What these banks will be, they will say, why don't we push the price lower? We pump money from here. Push the price lower and buy cheaply in order to make a profit, more profit in fact. So as retail traders are mostly caught in on such. So that happened. You see this week, that happened. And what time did it happen? It was at 2:30 p.m. Ugandan time. What time is that in the US? It's around let me see. It's around 7:30. So news was supposed to be released at 8:30 New York time. I guess I'm right. So when the news came in, we got into this trade with him when this rejection happened, and then this engulfing. We started stacking positions. So price pushed up to this point, then news came in. News pumped. See that red candle, guys? Let me try to delete this. This too. Now you see this week, this one. That was news. News pushed up. Our stop loss was around here, but it was pushed back down. This candle closed bearish. So we're in profit of some good pips from here. I'm explaining to you what really happened. We're in profit of some good pips, 30 pips, guys. To a stop loss of like 10. So what happened? When we saw these 2-week rejections, I sent him a message. I told him, yo, G is playing, so let's jump out. That was a New York session. And look, guys, Geo started doing it. Beautiful. So our major intention was to take us for this retest, then sell this pair. But immediately price pushed up after these 2-week rejections and broke this trend line and came back. We changed our bias. And we jumped out of this trade because it was a Friday. So those are the trades we took for the week. We don't normally trade on Monday, but I would give a small analysis. I'll begin with what I told you guys at the beginning. For this to confirm to us that this week's bias has changed is when we see a break of this trend line and a break of this level. That's when we shall be kind of sure that Geo has changed movement. Previous week I've been having effects from the Bank of England, and there's a rumor that price would be pumped. You get? That's why we are seeing rejection at such zones for buys. Some people will be like, it's already buys, but guys, the market is not running anywhere. I'll wait for confirmation. So let's use Monday to study the markets. If we see a major break and retest here, let's buy it for the week, guys. But if we see candles, we study these candles and price is reacting around that level, our bias will change. But we can't jump in from here yet, because we shall only have 1, 2, 3 confluences. Sample will be like, guy, there's a resistance. But that's why I always tell my students, don't trade on Monday. Monday is for studying the market patterns, guys. That's Monday, guys. Thank you for being with me. The person I'm supposed to have this with, he did show up, but he sent me a message that he wouldn't make it. So I decided to share some information, and if you really like the information I shared, just click the like button or subscribe. Push this video to a few. This is free information, guys. That's all I had to share today. I'll see you in the next. Have a good day.